Good morning, everybody. It is the 14th of November. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, not bad, thank you.
Good,
All
good.
good.
Excellent. Okay, been an interesting week or so in the markets, and looks like we're in for more of the same this week. Plenty of headlines for us to all digest, and then we will get stuck into the charts to have a look at how things are setting up for the week ahead. Before we start, if you do want to get involved in today's stream, please feel free to do so. If there's any markets that you're looking at that you want coverage on, please feel free to post them up, and we'll do our best to cover them in the half an hour or so that the stream takes. And also, if anybody wants to post up a trade idea when we get to the gun to the head section of the stream, please feel free to do so. We'll get those posted up to our stream, certainly anyway, the ones that we like. And you can test your skills against Steve and myself. So best luck if you're going to take part. Let's get to the headlines, because there are a fair few this morning. Number one on the list is that China eases coronavirus restrictions. The Beijing authorities announced on Friday that there would be a targeted and precise approach to zero COVID cases amid a further strong increase in daily cases. There will be a relaxation in quarantine and travel restrictions, which boosted optimism over a rebound in the Chinese economy, which helped underpin risk appetite and also boosted the euro demand as well. And China also announced a plan to support the property sector. The US dollar slumped again on Friday, continued to lose ground, with the index sliding to a 12-week low amid major losses against all majors, and euro US dollar, for example, surging to highs of around 1.0360, so well above the lows that we posted over the last month or so. The US consumer confidence number dipped. The University of Michigan Consumer Confidence Index dipped to a 4-month low at 54.7 for November from a previous reading of 59.9 and below the consensus forecast of 59.5. We had one of the Fed speakers yesterday, and in comments, Governor Waller stated that the central bank's November statement was designed to signal a step down to 50 basis point rate hikes, but added that the CPI report was just one data point and the markets are way out in front. So they punctured the euphoria there considerably. US yields and the dollar have both recovered a bit this morning, following the comments from Waller yesterday. The Bank of England continues to remain dovish in its rhetoric. The MPC member Tenreiro, however, maintained a dovish stance as the monetary policy has already been tightened significantly, but the effects on demand have yet to be seen. She also stated that interest rates should not be increased to above 3% in 2023, and then should cut rates in 2024, as this rate would further reduce output potential, and therefore there was a risk of over tightening. We also saw on the flip side of that some hawkish rhetoric from the Swiss National Bank. The chairman, Jordan, stated that monetary policy is not sufficiently restrictive to lower inflation, and the bank is prepared to take all measures necessary to restore price stability. And on the crypto side of things, sentiment still remains very vulnerable. Overall sentiment surrounding cryptocurrencies remained fragile over the weekend as the FTX collapse continued to undermine confidence and triggered a wave of further withdrawals, and Bitcoin traded close to a 2-year low this morning. So Steve, that's probably a good place for us to start on the charts. Let's take a look at Bitcoin and see how things are shaping up for the week ahead.
Yeah, let me just share my screen with you, Joe, and let's dive into it. Obviously, yeah, I feel there's more cryptocurrency shenanigans going to affect the markets in the coming weeks as this FTX story evolves. Let's take a look at the weekly chart first, as it's the start of a new week. Last week's candle was closed well below the support that's been in place. Really, this support really transpired way back in December 2020. So almost 2 years, we've finally broken down below it. I think there's further downside potential, looking at really support coming in around about the 14,000, maybe the 12,000, all the way down to 8,000. They're the first 3 levels I can think of. But really, it depends how really widespread this story is. it feels like a lot of the cryptocurrencies and the companies that were bailed out supposedly by FTX have that there could be a lot more that sort of like comes out of this story. Definitely doesn't feel like, I mean, it looks like a huge fraud case from what's been said so far, but obviously the courts will decide. So Bitcoin, looking at the shorter term chart, looking at the 4-hour chart, there is a little bit of positivity that we can see. We formed a low. The lowest we have been is 15,632, and we've also formed another low in the last 4 hours, and then we've got a really sort of strong reversal candle, a bullish outside candle since 4 o'clock this morning. So we may see a little bit of upside. I think this will, price action to the upside will be capped in a range between the 18,000, 18,300 area. If we do manage to close above this area, then we would have formed a double bottom. Now the double bottom will give us a nice idea of where we would expect a measured move. Measured move target for that would be just above 20,000, and we know that 20,000 is a really serious resistance level now. So they're the levels to watch in cryptocurrency. Let me dive into commodities. Taking a look at gold. And on the short term, we've broken outside of the bearish downward channel, broken up really nicely. We formed this double bottom here. That's played out. We've got another double bottom, which we've broken the neckline of. That neckline was around 1730, 1735. And again, we can take a look. Let's take a look at the 4-hour chart maybe, and show you where the potential for this double bottom, the measured move for this. Again, we take a measurement from the low to the neckline and extend higher. It's coming in around about 1837. It'd be slightly more than that. I've just done that very quickly, so it'll be slightly more than that. But that's the sort of area we're looking at. Resistance above, we do have decent resistance coming in between 1786 and 1807. And as I said, that measured move target is all the way up there. We seem to have sort of like moved quite nicely in this short-term impulsive move higher. Looks like we may be in the midst of wave 3. We had wave 1, correction lower. Wave 2, although there was this sideways price action Wednesday, Thursday, this for me feels like wave 2. Wave 3. Wave 3 is never the shortest wave. So we'll see how that plays out. We should get some maybe some little pullback for that 5th and final wave before we see some profit taking or selling coming in again. Let me take a look at silver also. Again, we've got this overall, we've got this really quite striking looking inverse head and shoulders formation. Looks like quite a complex formation. It will be probably better to see this on a daily chart. And as if by magic, we've got it pre-drawn. So the last 3 days have closed positively, but only just. So it looks like we're running out of a bit of steam. We've got a doji candle that formed on Friday. Today, price action has had a dip lower and rebounded strongly towards above where we opened this morning. That looks like a hanging man candle if we closed here, but let's see how the price develops over the day and see what really that candle forms. Now, for me, one of the real formations to watch out for may be a reversal where we get a evening doji star formation. That would need today's price action to close quite aggressively lower, and that would confirm that formation and maybe tell us we've topped out and had a false break on this neckline of the inverse head and shoulders formation. Also, just bear in mind we do have resistance in quite a big channel around this level. So from all this price action back here, let's bring the Ichimoku cloud on there to see where we are. We're above it. We're on a short-term basis, medium-term basis, we can say we are sort of trending higher. We're above the cloud. It's starting to look quite positive. Support really from the cloud coming in around about the 1940, 1950 level. So a couple of dollars lower. So yeah, this looks like quite a decent reversal. And we've got the measured move target on here. The measured move target for that looks like it. Let me just redraw it just to double check we have got the right target here. We take the head to the neckline, extend higher. 24.92 is the measured move target for the inverse head and shoulders, and again that comes in around about this area of resistance up here that we've had before. So they're the sort of two levels to watch. If we manage to break above this resistance level, that will then turn into support. So on the silver side of things, it's looking quite positive overall. Take a look at crude oil. The move higher continues. Let me just tidy this up a bit. It does look a bit messy when we have the cloud on there, but we've got so many lines on here also. That's a bit cleaner now. We've got a nice little uptrend. We've only got 2 points of contact, so it's a potential uptrend really, but that's where we'd look to see whether this price holds when it dips back down to this potential. Let's turn it into like a, let's give it a little bit of a different shape. So that looks like a potential trend line. We have targeted resistance and formed exactly the candle I'm talking about, the evening star formation, and moved lower. We've then formed a morning star formation like 3 days later, and this looks a little bit more positive on the crude oil side of things. So price action, you can see we are trading in this negative to sideways type of trend. Also, we can draw maybe, let's draw the trend line from here. Another potential trend line. So are we forming a triangle formation? Now, this has a tendency to break to the downside in line with the trend. But as we know, these triangle formations, you really need to wait for a break of either side to really go with the flow there. Levels to watch on the short-term basis in oil, the 92.66 level is resistance, and support coming in around about 84.34. We're trading around mid-range of them levels. So if anything, it just feels like we've got maybe a small bullish flag going on at the moment. So I'd be a little bit more positive on potential to see this extend higher. The measured move target would be around 92.66. So watching crude oil carefully this morning. If we do get that break to the upside, then we take out the 89.36 high, then go with it. 87.37 and slightly below there, maybe all the way down to $87 should provide some support as we continue this corrective rally. Natural gas, taking a look at that, we can redraw a trend line. Decent trend line now, 1, 2, 3, 4 decent points of support have come in. We had price action move down late on Friday. 3 o'clock candle was a bearish outside candle. That's pretty negative, but was supported by the upward trending support. So and a relatively positive start this morning. Support now coming in anywhere between the $6 level down to 5.90, and really targeting resistance around about the 6.67 level above, hoping for this positive momentum to continue higher. Well, all the longs are anyway. Everyone else who needs to buy natural gas is hoping for prices to move lower naturally. That probably covers it on there. Joe, you can hand over to you for the FX and the indices if you want.
Yeah, okay. We can maybe split out the indices if you want. I'll look at the European ones. You can look at the US.
Okay.
So let's dive into those now then. So starting off with the dollar index, and as we know, we saw prices slump quite considerably last week. So this is the daily chart. Looks as though we formed a top on the break down below 109.53, which is highlighted here by this black line, at the same time taking out this uptrend and completing this kind of top pattern. Not precise looking head and shoulders. It's obviously we've got a left shoulder potentially up here, so it doesn't really work, but for me it does form a top pattern, and as a result we have seen prices slide considerably lower. The breakdown candle on Thursday was then followed up with further selling on Friday. We've seen a minor bounce today, up by 0.16% as things stand at the moment, but not looking particularly healthy. So we've got this marked on the chart, the 38.2% fib level of this entire up move, which we've got as beginning back here in May last year. The 38.2 comes in at 105.13, so that for me looks to be a natural target to try and gun for in the short to medium term. We've also got these swing lows from August, which come in at 104.63. So I'd like to see maybe some sort of support form in this kind of region here, but ultimately the sentiment and the overall view on this remains bearish, and I think it's going to be a case of selling into rallies for the time being. So let's have a look at how that's impacted the other majors before we move on to some other requests. So this is Euro US dollar. Prices have been contained within this bearish channel for a significant period of time. Then we started to see prices forming some sort of bottom, which was confirmed for me on a break above 10093. And from then, like we've just seen on the dollar chart, but the inverse, we've seen a break higher and follow through buying as well on Friday. We are into a major resistance level as things stand at the minute. So we've got some key lows from back here in May 2022. We then saw that act as a resistance in August, and we're back at that level once again at 103.40. So we do need to see a break above this and a close above this, I think, on a daily basis for us to then look for higher prices. The 38.2% fib level here comes in at 106.10. And just above that at 106.52, we have the measured move of this bottom pattern, taking a measurement from the low on the 28th of September to the high here at 10094. And a projection of that higher comes in at 106.52. So looking for higher prices up here, but I think today is a key one. We need to see a break above this 103.48 level on a closing basis for prices to continue moving higher. If that fails to materialize, then maybe what we'll see is some sideways price action, maybe a pullback to retest this newly formed support at 10094 before then an eventual move and break higher above the 103.44 level. Let's take a look at cable. That's broken out of the downtrend, as we can see here. Also taking out this horizontal resistance at 116.45. We are bang into the 38.2% fib level, which is a measurement from the highs that we posted back here in February 2021 and May 2021, down to these crash lows that we saw off the back of that disastrous mini budget on the 22nd of September. So we're into the 38.2. We can also see some horizontal levels here as well. Roughly, so these lows from July, we saw it hold quite nicely there before it then broke, then it was retested, and now we're kind of into that region once again. So again, need to see a close, I think, above 118.40 today or in the next couple of days for us to look for a continuation higher on that. If we take a look at Aussie US dollar, this has completed a really nice inverse head and shoulders pattern on the break of 65.22. We had some resistance here at 66.81. We closed above that on Friday and we remain above it today. We had a little bit of a look below that today, but it looks as though buyers are still in charge here. The measured move of the head and shoulders pattern comes in at 68.74. So that is the target that I'm looking for, but we do need to be mindful that we have this downtrend resistance line as well, which may cap gains in the very short term. But all in all, anything linked against the US dollar is looking pretty bullish at the moment. Looking at dollar CAD, this completed a really nice head and shoulders top. We've seen the breakdown through the support line at 34.96 and prices have continued to tumble lower. We do have the 38.2% fib level now in view, and it seems to be holding prices for the time being. Let's see if that can continue doing a job. If we get a close below that, then maybe we'll be targeting a move down to the measured move of this head and shoulders top, which is down at 130.14, which also pretty much coincides with a 50% retracement of that pair. Dollar Swiss, really savage breakdown on this through 98.41. Big red candles over the last two sessions. A bit of relief so far this morning, up by 0.33%. We sailed through the measured move target of this double top that we had at 95.34 and now targeting the extensions of that measured move. The 161.8 level comes in at 93.44. We've also got this swing low here from the 11th of August, which is very much in view and looks as though it may be challenged in the coming sessions. If we see a breakdown through that, then we have a completion of even bigger range top that looks to have formed, and we can be looking for lower prices there. Let's just extend this trend line to see if that offers anything as well. Pretty much lines up with those lows there from August. So that'll be quite interesting to see what, if any, kind of reaction we get at that level. Dollar yen. So obviously we know this has been in a huge uptrend. We've seen in the shorter term a channel form here. We've seen a breakdown below 145.10. Prices have accelerated lower. We've got this swing high back here from the 14th of July, which may now act as some sort of support. We did close below it, and actually we are still below it this morning as well. So that may indicate that it's going to act as resistance on the upside, and we could see prices continue to move lower towards these other targets that we have at 135.58 and 131.50. So we had a couple of requests to look at some sterling pairs today. One from YouTube from Moch, who was looking at sterling AUD last week. So this looked to be forming a bit of a range. Looks as though we got a breakdown. Prices haven't really respected the newly formed resistance level too well at 176.72. But if we take a look at the intradays, this was actually my gun to the head trade from Friday. At 9 o'clock, the trade was slightly offside, but I think I'd still be sticking with that. I think that stop loss there at 178.30 is still reasonably safe. And still will be looking to trade that to the downside. Ultimate target for me is at 172.39. So not too great at the minute. Lots of choppy price action, but ultimately I still think we can stick with that and hope that that plays out. The other idea that someone's asked for on TradingView was sterling yen, which looks quite interesting to me on the 4-hour charts. I've got a nice looking head and shoulders pattern that I think's formed here. This right shoulder has played out, so we've broken down through support here quite nicely, making lows at 163.04. So that should now act as a support potentially, but if that starts to break down, then maybe we can start targeting the measured move of this head and shoulders top, which indicates the prices may go down to 158.04. So my preferred strategy on this today is selling into the neckline. I've got a resistance level and also a 38.2% retracement level of this right shoulder, which comes in at around 165.35. So that would be for me an ideal entry to try and get short of this. Now, there's a couple of places you can place your stop. First of all, we've got the high here from Friday, which comes in at 166.09. So that's quite a tight stop loss, but obviously gives us fantastic risk reward if we're going to target the measured move target here at 158.04. That's around 9.5 R. If you wanted to play it a bit safer, then maybe you'd put it up there above that swing high from Thursday, which is at 167.52, but that brings down the risk reward still to a very acceptable 3.5 to 1. So that would be my preferred play on sterling yen today. Steve, do you want to take us through some US indices and I'll then go back to the European ones?
Yep, sure.
I've got to change the banner there.
Let me have a little look at yeah, let's take a look at Dow to start with. Now, Dow, as we mentioned last week, is in an inverse head and shoulders formation, and it's playing out quite nicely. We saw this daily candle from Thursday, which really pushed us through that neckline. Further upside potential obviously is there. The measured move target for this formation would be a move to 37,300, and that would really sort of like take us back to levels we haven't seen all year. Basically, that's telling us like maybe we've really got to consider the potential for a squeeze or a Christmas run up to the heady heights. For me, it will all feel a little bit false. I think that we've got some tough times ahead. Interest rates obviously are key to this. We've had a decent figure out last week. The CPI figure came out for the US, and everyone seems to have calmed down and decided that that's saved us all. One figure doesn't make a trend or doesn't decide these sort of factors. So please be careful with this. But currently the resistance coming in at 34,280. That's about 600 points higher than where we're currently trading. The main consideration is probably for me is Friday's price action. This is a doji candle and looks pretty negative to me. So really we'll need, if we don't get that follow through that we're expecting after this Thursday's price action, then we could see even prices reverse in front of this resistance level. So short-term resistance at 34,000, just around about, just below there where Friday's high was. As I say, we really need to close above that to keep this momentum going. If we have a look at the move in total, we could say this is an impulsive move. We've had the wave 3, and maybe this is the 5th and final leg before we get a correction. So yeah, just really sort of like see how that plays out. Now, NASDAQ actually did manage to have an even bigger turnaround in terms of percentage basis. The inverse head and shoulder was looking dead and buried, really, the potential for it anyway. And then we got the really strong rally Thursday, the follow through buying on Friday, and we closed above the neckline for that as well. Again, I'll take that Fibonacci line off. There's the measured move target, 12,945. The measured move is from the head to the neckline, and we extend that move higher. Now, before we get to that level, we've obviously got some decent resistance as well. Let me just draw in the Fibonacci to sort of like see if we get some that line up and get a bit of confluence, which is like more than one level. So we've broken above the 38.2% retracement. That was the neckline level, so that was quite key. 50% retracement is not quite as decent as the 61.8 that we always look for, but that comes in at just above 12,000, 12,075, and then the 61.8 at 12,463. But support really for me would be around this 38.2% fib, where we broke through the neckline. Potentially we get a retest of that. That comes in at 11,685. So that's the levels to watch really as we move into the week. On the S&P, that's playing out really nicely. And again, we're seeing the actual measured move target getting very close indeed. That comes in at 4,044. The 61.8% fib is also a level to watch, and that comes in around about the psychological 4,000 level, just above there, 4,006. And as I say, the measured move target for the inverse head and shoulders comes in at 4,044. So they're the levels to watch. Support below around about 39.50, which was let's get the exact level, 39.44. That was Friday's low. Break back below there, and maybe we'll have a little bit of a retest. But overall, slightly positive with the indices, but yeah, really key to hold on to these gains.
Lovely, thanks, Steve. So yeah, the US has lagged a bit behind the European markets, it would seem. And if we take a look at the Euro Stoxx 50 to start, so this is the top 50 companies in Europe, we can see on the weekly chart that we've seen quite an impressive breakout of this ending wedge or descending wedge pattern on the weekly chart. That was completed a couple of weeks back now on the week beginning Monday, the 31st of October. And we saw some very decent follow through on that last week. So price is obviously quite muted today to start the week, looking to see if we can get some acceptance of price around there and potentially push to the upside. If we take a look at the daily chart here, we can see we've taken out some resistance at 38.21, potentially forming some sort of bottom pattern here in the process. We are fast approaching a 61.8% Fibonacci level at 39.55, and this is being seen really across the board on these European indices. So this, I think, will be an interesting test. We can see there's a cluster of previous price action here as well, which may cap any upside advances. Just tag a few of these lows in here, which pretty much line up with the 61.8% level. It might not be a precise level, but certainly a range, I think, between maybe 3,955 to 3,998 would be the interesting level here. If we can get above that, then I think I'd be starting to get quite bullish in believing in this turnaround. But I think still plenty of work to be done. Looking at the DAX, the German 40, again, similar situation, broken out of resistance at 13,975, and again, approaching this 61.8% fib level. In this instance, it comes in at 14,576. And again, we can see a number of previous attempts at this level, although this level didn't actually exist previously, but it seems to be a pretty interesting level on the charts. If we take a look at these lows as well, just to try and capture a few more levels, we can see maybe there'll be an extension up to 14,800-ish on DAX. But I think into this zone, I'd be maybe looking to take some profits off if you've been running this any longs in this period here, and having to rethink about what to do next. I think that's a pretty key level for that market. Let's take a look at the FTSE 100. This is slightly different from the others. Let's just go back to the weekly here. We can see prices have been stopped at the 6822 level. It's been such a critical level for many months, going back to May 2021. Every time we've seen prices pull back to this level, we've been greeted with buying interest, and prices have continued to move higher. This market is a strange one because it's made up of so many companies that generate revenue in the US dollar, which of course has been very strong for many, many months. The move higher really of late has been driven by dollar weakness, believe it or not. So it's kind of a bit of a balancing act in this market where each side is kind of covering off each other. So we've seen the domestic stocks in the UK now really start to rally, as well as what we've seen in the European markets. This has really pushed the markets higher, and the two kind of dollar strength and dollar weakness plays are kind of offsetting each other. I mean, this market isn't really going anywhere. So likely to remain range bound between these levels at 6822 to 7687. What I did notice, however, on the daily charts was the presence of a 78.6% fib level from this move here. So from the highs that we posted in August down to the lows that we posted in October, that comes in at 7391. So the first attempts at trying to overcome that level have been met with selling interest. So if we can get above the highs that we posted on Friday here on the FTSE, then maybe that will trigger a move back up to these highs that we posted back here in April earlier this year. But still a bit of work to do there as well, I think. So that's it from the coverage on the charts. I don't think there's any other requests, Steve, for any other markets.
No, I haven't seen any. You've done Aussie dollar, haven't you? So that was covered earlier in the show.
Yeah.
Yeah. No, that's about it.
Okay, let's move it on then to the gun to the head challenge. So this is where we also ask you guys to get involved as well. If anybody's got any ideas that they like this morning that they think could work between now and 9 o'clock tonight, then please let us know and we'll go through those and get them posted up. So the rules of the game: we pick a trade idea on the video. Each of the ideas must have stops and targets. The risk reward ratio on these ideas must be better than 2 to 1. All the ideas that we place are at market, and the ideas will expire at 9 p.m. or when the stops or the targets are hit. So we post our trades up to the TradingView profile that we have. You'll see them on the ideas tab. Steve was looking to buy silver.
Was I? Yeah.
Yeah, I mean,
really work.
looking at that on the daily chart, it still looks like a fantastic opportunity given the inverse head and shoulders that you highlighted earlier. But on the intraday basis, that was stopped out, pretty much still around where you got in terms of the price level, but maybe a retest of the broken short-term trend line there could potentially play out. I did a trade on sterling Oz, looking for this double top to play out. At 9 o'clock, it was 0.06R offside, so tiny, but goes down as a loss, sadly. Still think that looks okay, and would probably give that a little bit more time, but for the purpose of the game, that idea has now been closed. San Hadid got involved with us on Friday. He was looking to sell gold, noting that there was some bearish divergence on the hourly chart. We can see there, making a lower high on the RSI while the price was continuing to move higher. That trade idea wasn't stopped out. It was actually offside 0.62R at the 9 o'clock close, and that's pretty much where he got in last on Friday. So maybe that still looks like it's got some legs as well. And TAF was selling Bitcoin. He was onside 0.71R on that one on Friday. So all in all, we lost money across the board, down by 0.97R, which certainly isn't a disaster. And we'll reload the gun today and see if we can get some winners. So Steve, you got anything you fancy?
I haven't really. So when I don't have anything I fancy, I always tend to sell cryptocurrencies. So I'm looking at Bitcoin, really, and this is the reasons for it. We basically were trading below this 18th of June low, go all the way back to the June low here, 18th of June. So that's like a decent resistance level, but there's other resistance levels. We've got a trend line move from the early November swing high, 8th of November, that is. Also, we got a move higher on the 8th, on the 10th of November, and there's potential resistance coming in the form of Fibonacci and downward trending resistance just above. We've had a bit of a rally this morning, just for a couple of hours, but the last hourly candle is a hanging man candle in my eyes, so we could get a little bit of a reversal from here, just like a little bit of a dead cat bounce for me. Bitcoin is going lower as far as I see it, and nothing to change my mind on that yet. So getting in at 16,797, selling it there. I've got a 4-to-1 risk reward, just going to be quite punchy with this, thinking that once we get, if we start hitting these new lows, we're going to get a little bit of panicking out of longs and stops below there. So targeting the move to 14,397, just a nice 4-to-1 risk reward trade idea. 14,000, around about there. There's some support from previous price action. So yeah, risk reward 4-to-1, pretty decent. But yeah, that's what I'm going for on the Bitcoin on the intraday trade idea.
Okay, Steve, we'll get that published up now to the profile. So my go now, I'm going to take a look at sterling yen. So this was highlighted by Fadi, who was watching this morning on TradingView. So thank you for bringing that to my attention. You haven't given us any levels or targets for yourself, so I'm going to have to steal this, I'm afraid. Had you have done that and participated in the game today, maybe we'd have thrown you some coins and published this to our profile as your idea. But next time, hopefully you will. So this is sterling yen, head and shoulders top on the 4-hour chart, broken down through the neckline at 165.08, made a new low in the short term at 163.04. So we're rallying now over the last 4 hours on this candle. My ideal entry would be 165.35, but I've got to go now because the gun's to my head. So it's currently trading at 164.89. I'm going to sell it here. I'm going to go with a stop loss at, I'm going to go nice and tight actually. I'm going to go opt for the more aggressive stop, which is for me at 166.23. The measured move target of the head and shoulders comes in at 158.04. So that's ultimately my target. It might be a little bit ambitious for today. In fact, highly ambitious, I'd say. But you've got to be in it to win it. I'm going to target that at 158.04, giving me a risk reward ratio of just over 5-to-1 on that today. So that will expire at 9 p.m. tonight. If anybody wants to follow these ideas throughout the trading session, you can do on our TradingView profile at signal_center. Okay, we've got Join Motivational Club is looking at Euro New Zealand dollar. So it hasn't given us any levels, but let's just take a quick look at that, shall we? As we do like people getting involved in these streams where possible. So first of all, let's take a look at the daily, and we can see here that prices rallied into a major resistance line at 173.47. If we go all the way back here, we can see why that level was relevant. We did overshoot it. Prices then chopped around, forming what looks to be a bit of a top. I had here a neckline of that top coming in at roughly 170.61 that was completed on this move here on the 31st of October. And since then, it looks as though that has now acted as a resistance. So I think I'd be on board with selling that, to be totally honest, following the completion of that candle there on the 10th of November. And yes, I can agree with that. I'd be looking for lower prices. If I had a gun to my head now, what would I do? This is the daily chart, bear in mind. I'd be selling it somewhere around here, stop loss above the high of that candle on the 10th of November, and looking to target probably a move down to the 61.8% fib level to give us a better risk reward ratio. That's a 2.32 risk reward ratio on that today. So hopefully that was useful. I'm kind of in agreement with you there. Good luck if you're trading it. Okay, data wise today, Steve, not much on the old calendar. Let's have a look at what we do have. We've got a Fed speaker today, Fed Governor Brainard speaking at 4:30 UK time. And then tomorrow morning at 7 a.m, we've got the latest read on the employment situation in the UK. On the 16th, so on Wednesday, we've got inflation data in the UK. And on the same day, we've got Sorry, that's on Thursday, both those numbers. That's the US retail sales as well. So as mentioned by the Fed's Fred Waller, stated that all of these data points are in focus when it comes to adjusting rates and deciding what to do with monetary policy. So they're pretty much all pretty important at the moment. Okay, that's it from us today, Steve. A bit longer than usual, but hopefully that was useful for people to kickstart their trading week. Please feel free to continue getting involved with us every day. We do enjoy your participation, and we will be back tomorrow morning.
Yep. Cheers all.
Have a great day. Goodbye.